high dividend stocks in Bursa, Malaysia for 2024. 2 high dividend stocks a week for dividend chasers like you. Builds passive income to replace your active income. These stable dividend stocks are currently giving 5% or above in a year just for dividend returns. Kicking things off, we have Hong Leong Industries. At the current price, dividend yield for the past 12 months at a respectable 6.2%. Hong Leong Industries principally engage in the manufacturing and sale of Yamaha bikes, motor spare parts, ceramic tiles, and even motorboat motors. For the past 1 year, its stock price has been stably range bounding between 8 ringgit and 70 cents to 9 ringgit and 30 cents. How likely is this dividend payout can be sustained or even go higher in the future? For that, we look at the percentage net margin by dividing net profit with revenue. In this case, 291 million divided by 3.4 billion, that is 8.5%, a very decent profit margin. Also, we want to analyze net profit growth. Looks like it has grown 38% from 211 million to 291 million, being cognizant of the fact that this net profit isn't at the level before 2020 pandemic. Disclaimer, this is not investment advice. It's also not a recommendation to buy the dividend stocks cover, as I do not know your financial needs, circumstances, risk appetite, or investment objectives. Then next, we want to look at these stocks dividend risk to you. For this, we look at the company's leverage and shows to the extent to which the operations are funded by lenders versus shareholders. Now, in the business world, a gearing ratio refers to a company's financial leverage, essentially how much debt they use to run their operations. Debt can help a business grow faster, just like in racing. Higher gears lead to a greater speed, but too much debt can cause problems. If interest rates rise fast, heavily geared companies can go broke overnight. Your gearing is your total debt minus cash in hand divided by shareholders' funds. For Hong Leong Industries, its gearing is 0 and it has no debt. Matrix Concept Holdings. At the current price, dividend yield for the past 12 months stands at 5.6%. Matrix Concept Holdings may sound like the company behind the Matrix film franchise starring Keanu Reeves, but it is disappointingly a real estate property developer. Far from being a disappointing Malaysia dividend stocks though to park your money in. For the past 1 year, its stock price has had low volatility, hovers around 1 ringgit 50 to 101 ringgit 60 cents. So how likely is this high dividend payout can be sustained or even higher going forward? Now for that, we look at again the percentage net margin for the past 4 quarters by dividing the net profit with revenue. In this case, 207 million divided by 1.1 billion. That is a 18.6% margin. Impressive. Growth wise, not so much compared to the year before, from 205 million to 207 million, not at the level 3, 4, 5 years before. As usual, the next thing to do is to look at these stocks dividend risk to you, checking for possible red flags. The gearing ratio measures a company's debt burden when a company takes on loans to buy more assets that generate juicy returns. That can ramp up profits fast and furious during good times, but tends to crash the hardest though when the economy hits a pothole. For a property developer company, 0 gearing ratio, or in other words, a net cash position, is a pleasant deviation from the norm in this sector, and that is the case for Matrix Concept Holdings. Of course, this may improve or worsen in the future, so if you want to be aware of future changes, do follow and subscribe. If you prefer weekly email updates, there's a link in the description below or in bio. Questions asked below. Here's your next high dividend stocks clip to watch. Also check out more of these global investment strategy videos updated monthly only for CFLiu channel insider members.